Welcome back, guys. Today we're going to analyze the premium brand of credit cards, and that is American Express. Now, in the last two videos, we did Visa and MasterCard, and American Express is the other giant. So let's take a look at them today. Past 5 years, they're up 97%. That has outperformed the S&P 500 and the other two card companies. They are a $166 billion company, so a lot smaller than MasterCard and Visa. MasterCard was 400 billion and Visa was 550, so much smaller. And price to earnings ratio of 19, that is lower than both Visa and MasterCard, so that is a good sign. Let's take a closer look at the financials here. Their gross margin is pretty decent, but it's lower. Let's look at their revenue growth, I guess, first. And basically, the revenue growth is very strong, except for times when we've got recessions. Then the revenue growth dies pretty hard. So basically, this company is pretty sensitive to the economy. And if we go into some major recession or something like that, then it could see a downfall. However, it always comes back and usually comes back very strong. It grew by 20% in the last year, so that's really nice. And quarterly, it's still growing by 13%. This may be indicating a slowdown in the economy. Something to keep in mind there. Anyway, they do spend a lot of money trying to keep their customers happy, and that's why their margins are so much lower than Visa and MasterCard. Also, they kind of act as a bank, so they're a bit different. They actually do take on the loan balances of their customers. Now, a lot of times their customers are pretty responsible because this is catered towards more of the affluent individual, and they do not usually carry credit card balances and paying interest, but some do, and that's partially why they are somewhat cyclical towards the economy. Anyway, yeah, their net margins are like 14%, I think, 13%. Taking a look at their balance sheet is actually really, really good. Negative 3.6 billion in net debt. That's always very good sign. Even though they are acting as a bank, they still have negative net debt, which is really, really good. Cash flow. Their cash flow is higher than their net income, and not quite sure exactly why. Maybe it's stock-based. Nah, I doubt it's stock-based compensation. But yeah, they've got really, really high cash flows, and that is awesome to see. They don't really do a lot with that cash. Looks like they're just adding it straight to the balance sheet. But they pay a bit of a dividend and they buy back some stock. They could definitely buy back a lot more stock. They could pay more dividends, but looks like they're just adding it to their balance sheet, maybe preparing for some type of downturn. Who knows? Let's take a look at their stats. Their ROIC is much lower than Visa and MasterCard at 13%. Their gross margin at 62%, still pretty high, and yeah, their margins are much, much lower than Visa and MasterCard. Margin of about 13%, 14%, 13 or 14%. Pretty, I mean, it's pretty good, but it's not as high as the other ones, of course. Taking a look at this, they have 10% of the purchase volume is American Express, and even though they only make up 2% of the credit cards in circulation. So yeah, they are definitely catered towards the richer person, and they get people to spend, and they keep those customers happy by giving them special perks pretty much, and that's why their margins are so much lower. Let's take a look at what the analysts think here. The analysts are projecting 13 going up to 15. That is very good growth in their earnings and revenue. Revenue growth of 10% and then 8%. Let's check out their short percentage. Their short percentage is only 1%, so that is lower than Visa, but a little bit higher than MasterCard. And it's still really, really low, so total green flag there. Doesn't look like... So I thought maybe their short percentage would be higher because this might be a company you'd want to short in case of a downturn in the economy. But but actually the short percentage is super low. So yeah, that is a good sign. Also, something to note is American Express makes up a large holding in Berkshire Hathaway, and he really likes this business. So 8% of Berkshire Hathaway is American Express, and that is much higher than their MasterCard and Visa holdings. So Visa and MasterCard make up about the same for Berkshire Hathaway, but he does like all three businesses. He holds all three. Yeah, Warren Buffett, of course. Let's look at the spreadsheet here, or the valuation model. I put the EPS estimate, revenue estimate, buybacks here, net debt of negative 3 billion, discount rate of 10% because I want a 10% return on all my stocks, exit multiple of 20. They're currently trading at 19, and Visa and MasterCard, I put their exit multiple at 25, so even higher than American Express. I think an exit multiple of 20 is fair here. I mean, if I pushed it to 25, this valuation would be even better. But yeah, I think 20 is fair just because they do have slimmer margins and uh, they actually have some risk in their loan book because they actually hold the loans on their balance sheet. Now, in terms of growth, they are a little bit slower growing than MasterCard, but still very strong growth, especially in the last 3 years. They've had like 20% growth in the last 3 years each year. So very strong growth. I think that I think they'll probably be able to hit these numbers most likely. And same with the revenue margins. Their margins might even expand past 13%. I feel like 13% is quite low margins, but still, even with 13% margins, their fair share price is still at 271 and 305. So they are currently a buy. I would definitely take American Express over the other two. Here's how I rank them. I rank American Express at top, and then MasterCard, and then Visa. So that's how I would buy these three companies. And yeah, very solid companies, all three of them. You could just buy all three and just be done with it. I like American Express the most. So yeah, that's my analysis. That's my thoughts. Let me know what you guys think in the comments and make sure to hit that like button. Peace.